All right, everybody, thank you for being brave and still with us with that sunshine outside. I think there's 2 more panels in this room for the day, and then we will have a wonderful sunset aperitivo upstairs with delightful snacks. So now we're going to have a conversation about distributing IP products, I should put in parentheses, IP data products, on public blockchains, and the distribution challenge that that poses, specifically in the context of public blockchain. So I'm happy to introduce the panelists today. So Kristen Mierzwa, who's head of digital asset at FTSE Russell, Matt Parkinson, who is product manager at Bloomberg, Stephanie Roughton from S&P Indices, who's senior director for tokenization and US equities, and Vasilios Koutsoulis, who is at MSCI as an executive director and index derivative product specialist. And our grand moderator for this conversation, John Motzel, who is head of sales for Americas at Kaiko. Thank you, everybody, for being here. Thank you for the audience for being here, and enjoy the conversation.
So, 4 index issuers walk into a bar. Oh, wait, 5? Kaiko as well? All right. I got the laugh. Was it good? Yeah. I had them waiting and chomping at the bit for that joke. I've been teasing it all day. Was it good? Yes. Okay. Thank you. Thank you. All right, this is a very important topic as we see the convergence of TradFi and DeFi coming together in real applications. So intellectual property, what is that? It's anything that is, well, actually, sorry. Can somebody on the panelists explain IP really quick for the audience? Intellectual property, anybody want to volunteer? No? Yeah, it's a very tough topic to cover. Let's call it intellectual property that, it's owned by the relative company that needs to license it to a third party. So how do you do that when there's assets listed on chain? It's not an easy thing to do. So it's worth its value on this stage right now. It's worth it's 40 minutes of a conversation with 4 very strong institutions. All right, so as these markets are converging, there are assets that will be represented on chain in terms of tokenization or RWA. And we're seeing assets listed on chain that are referencing these products. So how do we approach it? And what are some of the problems? What are some of the things that we need to figure out together? And so we have 4 index issuers on stage that, we'll solve that problem right now in the next 32 minutes. All right. We're going to do our best. So let's get it on. How is the convergence of TradFi and DeFi changing the way you think about distributing index products? We're going to start with Kristen.
Hi, everyone. So when you talk about distributing, I assume you're thinking about distributing our data or index products on various blockchains. And we definitely want to do that at FTSE Russell. Of course, though, we don't want to cannibalize our current business line and have things like the constituents of the Russell 2000 on a public blockchain. And it's not just about our business, but it's also things that we all think about when you sign a contract with someone. What if we have to restate that index? How does that happen when you've had a smart contract that was triggered off of data that you put on a public blockchain that is having atomic settlement? How do I roll that back? What about contractual disclaimers, what you can and can't do with the data, that kind of thing. So we've been engaging across the ecosystem, and I think what you just said at the beginning is figuring this out together. Everyone from TradFi is working really hard with everyone from DeFi to figure out how can we make this work. So one of the projects that we've been working on with Chainlink is how do you encrypt all of our data, not just index values, but constituents themselves, so that you can either put it on a private or public blockchain and enable some of the more atomic settlement future that we're all thinking about. But that was a big milestone for us. So for probably over a year now, we've been talking to them about how do we make this work. But again, we're really trying to make sure that we didn't put something that's on an immutable ledger forever, right? Once it's there, you can't take it off. So for us, we think this new try with encryption is a good path forward, but there'll be something else that comes along, right? Like this is what happens in our space is you gotta keep paying attention because it's not gonna be set it and forget it. The technology changes all the time as we all iterate with each other.
Yeah, the way that we were kind of looking at this is it's really a question of what does distribution mean. Traditionally, it's gone down defined channels, defined geographies, defined market hours. And now our customers are looking to embed this data within a smart contract. And it's going to really expand to many different endpoints. It's going to be new protocols. It's going to be token issuers. And some things that we probably haven't even spoken about yet. There'll always be some new products out there. And we're starting to see a lot of client demand right now. We started to work to tokenize or to provide data a value for U.S. Treasury products that are going to be on chain. And the question that we're working through with our partners like Kaiko is how do we kind of protect the IP that you brought up a little bit there and maintain some licensing issues.
We can go right down.
So are we going down? I think the elephant in the room here is that DeFi expects permissionless data. Whereas financial institutions, they need controls, they need good governance, they need auditability. And those are kind of some of the issues that we're really trying to think about as we move into this space. So it's not just protecting our IP, it is also enabling us to maintain and meet the regulatory burdens that we have to meet at the same time as enabling our clients to also meet their burdens. Which is why it's actually so exciting when Cameron and Amber announced the tokenized iBox, the infrastructure there, the transparency that we're going to get, the reporting, that's really exciting and something I'm sure we'll touch upon later.
Yeah, so for us, it's I agree with that, 100% by the way. We're an IP data company essentially, right? The big part of this is how we protect our IP, but also I think it's very exciting to see how the convergence leads to kind of new innovative products and especially speed to market. This is what is really impressive for us. So we have spent a lot of time and a lot of resources on improving our capabilities on custom indexes, for example, right? And this eventually will be something where you can launch products, go to market much, much faster through the DeFi advances, basically. So for us, it's very interesting, but at the same time, we are cautiously looking at from an IP perspective as well to put, kind of put the barriers basically to protect our IP.
I want to pull on one of the threads that Steph brought up is standards. And as Kaiko is a crypto native company, so the standards that are faced on us are not the same as what you're faced with and on a typical product. And being pulled in the DeFi ecosystem, are you expected to loosen standards or what's the conversation? We can start with Steph or we can move down the panel, but just the topic of standards.
No.
Yeah. Short answer.
No, I think we need to educate DeFi on the standards that we expect and are expected of us. And I think actually we're starting to see, as you mentioned earlier, this convergence where we're starting to bring the best out of one another. Whereas we're starting to demand certain standards from our DeFi partners at the same time as they're also enabling us to innovate and move quicker. I don't know.
If anybody was here for the last panel, we talked about convergence, and it's a very good topic. Yeah.
So I'll talk about something that we think about from two different angles is we've all been at the panels today and you're hearing a lot about digital twins or the different models where new tokens can be issued. On our traditional businesses, and so not thinking about our crypto indices, how does that impact free float and the full market cap when all of a sudden you're like, oh wait, do I count that? Do I not count that? So that's coming up more and more in our committee meetings on the equity side, and we're trying to prepare for that. And I'll just add one other part on how all of this technology is impacting our traditional space. And that's what happens when we go to 24/7 trading. So most of our indexes close when that particular market or the last security inside an index's market closes. So what are we gonna do? Are we gonna be closing indices several times a day? Are we gonna have now we're all closing indices in the middle of the night? I don't know. But getting ready for that, I think has been great because the crypto native side is pulling us into into that environment. So the other thing, because this is a question about standards, that we've been obsessed with is the tokens in issue on the crypto side. So how many tokens are there of Ethereum, Bitcoin, so on and so forth? I really need that if I'm building a market cap weighted index. Price is very important, but tokens in issue and getting that right is really important. And it's actually quite hard, even though you don't have traditional network events or corporate actions in the crypto space, trying to figure out like when did EOS go to Vault A and when are you double counting market cap and those kinds of things. We're putting the same rigor around that we would be obsessed with in terms of getting free float and token or shares and issues correct on the equity side. So I think we're doing a pretty good job of making these indices manageable and you're getting a true reflection of the market. One last thing, sorry, I must be excited about this topic. You know, when you think about crypto, you're like, tokens are getting minted and burned all the time. So will that change something in the TradFi space where right now most traditional indices change their shares in issue once a quarter, unless there's a complex corporate action and that gets applied intra-quarter, but will we move to a point in time where we're not so worried about turnover, but we're actually worried more about the true reflection of that particular basket, where we could be changing the metrics all the time? And I think someday we will get there. We're not there yet, but it is again an interesting example of crypto kind of making us rethink how we're doing things in our traditional.
Is that reflecting more of an actively managed portfolio at that point?
Could be passive, right? Like, yeah, so it would be a lot of turnover, though.
Yeah.
Yeah.
It could have QIS implications as well, so it's very interesting. QIS strategy is basically doing that on a daily basis, theoretically, right? But as you say, the market is probably far from that yet, but yeah, very interesting.
The operational challenge, I think, is a really interesting topic. So can we dig on that a little bit more? So the either corporate actions or restatements. Matt, have you thought about this topic?
Yeah, from an operational perspective, I think corporate actions 24/7, all of that, we're going to get influenced by all of that. But the one that we've probably talked or thought about the most is 24/7. And 24/7 is more than just keeping the lights on for a little bit longer period of time. The market structure is going to change. You're no longer going to have the overnight window in order to have reconciliation, any validation that you might typically rely on. And something just as simple as when is the end of the day, that drives price reporting and so forth. And we need to kind of think through those things.
What does on the corporate action side, what does that actually mean for crypto for the audience? What is defined as corporate action for a crypto token, or does it exist?
Well, a lot of times when these tokens want to change something like their purpose was governance and they want to change it to being gas fees or vice versa, they'll issue a new token while the old token is still sitting out there, and they tend to mint the new token so you've got double the market cap, and it's confusing because you're like, when do I actually do this? And there's no effective date for something, and they'll announce something on Twitter and you're like, oh my goodness, I'm using Twitter as my primary source for this. This is hard. So what we've been doing is holding that back to once a quarter, which is actually what we do in the Russell series as well. And then we'll let that go through, but we do an announcement and we work with all of our clients to make sure, hey, if we swap token A for token B, can you custody it? Is it ready? That's the big, you don't want to push an event on someone and they're like, now I can't replicate your index. But this stuff is hard because every single one of these I've seen so far are different. So it's hard to write a rule book and say, this is what we're going to do every single time we see this, because the crypto community doesn't care.
It all starts with taxonomy, and we can't agree on it. On a simple taxonomy, too. That's where it starts, and can't even start there. Yeah. We're doing our best.
So for us, out of the subjects you mentioned, the reporting aspect of this is quite interesting, right? So 24/7, absolutely. I think the market is going there. We don't know exactly how it's going to look, to be honest, right? So we kind of need to decide, all of us here, how it's going to look in terms of, we're going back to trading on a Saturday and a Sunday. When we're talking about institutional clients, we're probably very different than retail trading, right? So all these are questions that I have in mind, but I also I think it's very operationally for index providers. It's very, very useful to have like reporting, right, on your products, on almost like a live manner, and also billing even, right? So all these efficiencies that are coming from DeFi, I think are very, very useful for us. And I think the market is going to go there in a matter of probably quarters, not even years.
Are you saying using blockchain for reporting or? Yeah.
On-chain reporting, for example, on products based on MSCI indexes, yes, or any index provider, really. So we have an ecosystem of products that we currently look at very closely, listed futures, listed options, swaps, ETFs, right? In many ways, there's an extra pillar of products, basically, where we kind of need to track AUM, and it takes time, and it's not necessarily super efficient. With using smart contract features, we can do this on a live manner, right? So it opens up a whole different capability toolbox for us, which is, I think, very interesting.
I want to shift a bit to something fun. What is everybody excited about? Any specific projects? So in the beginning, we talked about a few, but doesn't have to be like an actual product, but maybe the direction that we're going. What is something that you're excited about? We'll start with you, Vas.
Right. I kind of inferred already the custom capabilities basically we have improved massively over the last years. We are investing heavily on this, and we now can create indexes, simple indexes in a span of hours, and we give the tools to clients to create it on their own, etc. So this has improved massively, and we see more and more customization needs basically from the market. I wouldn't be surprised at all if in sometime in the future you are able to create products on these indexes in an extremely fast manner, upload these products in a trading environment or a platform or a DeFi or a traditional even exchange, but then again use chain functionality to get all the reporting, the billing, and so on. So the idea is that idea creation, when a client thinks about an index or a thematic index even, or a custom basket, into a product that is traded and cleared ideally centrally, right? And an on-chain transaction in a span of hours, right? We are very, very far from this, just to be clear, because the market is not there yet, and probably the demand is not clear on this desperately needs institutional flow, right? This is not something that a retail client wants or needs right now. But I think this is where all the index providers are probably going to go in a span of years, probably. But I think it's super interesting, and it's the most exciting thing, right? Having an idea created, use the right instruments and the right calculation tools to create the index, and then trade the thing, clear it centrally, and book it in a span of days or even hours.
I'm excited by it all. I'm genuinely really excited by everything. I think not just I think what we're doing is so innovative and so, like, the whole thing is so exciting. Seeing the infrastructure change, seeing the way that people are going to use our indices, people are going to ingest our indices, people are going to create financial products and the utility that can be created from our indices. I think that's really exciting. And then additionally, it's the mobility, the collateral mobility that will come from these new types of financial products. And then from us, from an index perspective, having things like the tokenized iBox US Treasuries Index, where we have embedded the metadata and the permissions and the licensing, the ability to see how our data is being used, and then be able to analyze that and better understand the market, and then create new types of market-relevant products, I think is really exciting. And I also think this is going to happen really quickly. Like, I'm not going to put a number on it, but very, very quickly.
We're also very excited for everything that's happening and how fast some of the stuff is developing here. One of the first things that come to mind is a recent partnership that we've done with the Kaiko folks in order to bring our fixed income pricing on chain. That's something real. We're seeing a lot of traction there. So very excited about that. And then just more broadly for overall business, from all the conversations that we're having with our customers, they're constantly asking us what's happening. Is there real adoption here? Some of the customers are really already building here, depending upon what they're looking at, and other ones are just really figuring it out. And we're working on bringing some on-chain data so that clients can use data and analytics to actually figure out what's happening for the various products out there. And that's probably what we're most excited about.
That's great. I've got a couple real-world examples that we're working on where it's, again, a mashup of all of everything we've been talking about, tokens, crypto, and actual individual securities. So we have a client who is a crypto insurance company, and to hedge the insurance fund itself, they want to have Bitcoin, gold, and silver. And there's lots of ways you can do that, but the way they're going to implement one of the strategies is with Pax Gold token, Bitcoin token, and the Ondo iShares Silver token. So that's one index, and that's pretty easy. But then they want to expand it into using ETFs that cover some of the industrial commodities because there's not a really liquid token out there yet. So they're like, great, we'll use an ETF for that exposure. And then, of course, they want another version that includes miners for some of the different metals as well. So those are individual securities. So we're being asked to pull that all together. And then silly things like, you're like, when is the end of the day for that? How do we calculate a real-time index for that? So they're really fun problems that our clients are coming to for a real thing, right? Like they've got an insurance fund that they need to properly hedge against the insurance policies that they're writing. So I think that's really fun, is our clients being so creative and saying, we know you have all the bits and pieces. Can you put this together for us in some way?
And so there's a lot to be excited about. And I want to go back to something Steph said earlier around education and why education is important, because there's a lot that we can do and we're planning to do and we're trying to do, but the topic of education is really important because we're learning from the other side and the index side is learning from the DeFi side, and DeFi side should be learning vice versa. What does that mean for each firm, and how are you both all approaching it on the education side?
I can start. So I'm not claiming to be an expert on this field. So I'm almost feeling that I'm coming with my my knowledge, but at the same time I need to be open to new things, right? And I think we're all more or less the same side here. In many cases you have to explain what you're seeing in the market, and as you said, there's like there needs to be advancement on communication, basically, from both sides, right? We embrace, I think, the speed to market, as I said earlier, and also new things that are to be done. That said, we kind of need to understand that there's a good. Sometimes regulation is not that bad necessarily, and also rules and quality assessment, quality control in many ways. It's a pretty good thing, and there's a good reason why you have 4 of the largest index providers here, and we all have our quality assessment and quality control tools, and they're very heavily active. So in terms of education, I think we kind of need to make sure the DeFi side of things understand our needs as more traditional, and with a mind on institutional clients, right? We need to make sure we tick all the boxes, KYC included in many cases, right? That make all the institutional clients a bit more comfortable to to reach that doorstep. In some cases, they're in the middle of their journey. They need to understand how this works, and in some cases, it's not super clear even to us, right? So that's my assessment.
I'll add on to what you said there. It's a journey with our customers. It's as you go into those conversations, being willing to say, I don't know that yet, or hey, how are you looking at this, depending upon who that customer is and where that conversation is going. Because there's constantly new products coming online, and they want us to be able to solve their problems, and we need to be able to evolve our products for whatever they're looking for us to do there. So it's a journey with our customers, and that's also just something that keeps us excited.
I try really hard to redefine crypto words when I'm talking to someone, because it's all been done before in traditional finance, but they just call things just more playful words. So trying, when you're having a conversation for the first time, to not get too much into the jargon and translate as much as you can. And there's still, like, you know, new things for us all the time. I'm still learning about vaults. And so, you know, we're just all the time having to figure something out. So I try really hard to share that knowledge. And I'm sure same up here, people are still like, I don't really understand stable coins, because they're all different. There's not just one type of stable coin. And something else I just wanted to talk about, when you're thinking about policy regulation, where does a traditional index provider sit in this space? Just thinking even about stable coins, yield, as we know in the US, is not going to be okay, but it's okay elsewhere. So what do we do as index providers where you're like, I've got a client in Brazil that's happy for that, but that's definitely a no-no in the US. So do I go forward with the one in Brazil, because am I going to upset regulators in one area? So we have to educate regulators on every step we make and say, are you going to be okay with this? Because we don't want to move forward if this is going to be upsetting, especially because it can impact the rest of our businesses, any move we make in the crypto area. But that's what keeps it fun, because it's, you know, it's different every day.
I see parallels to, speaking of IP, a really good parallels, think to the music industry. You know, there's a lot of work that goes into music IP. And then LimeWire came out. And I was a proponent of it myself. But there's very important education that happened in the next 4 to 5 to 6 years about how much work goes into creating music. It's not just stepping in front of a mic. There's a lot of people involved. There's a lot of parties, you know, with technology. There's different venues. There's a lot of, you know, even regulation comes into the music industry. And so I see parallels to the IP of indexes as well. I'm just making a comment here. There's no real question, but if anybody shares a similar.
And also the depth, if I may, right? So you know the index providers for the flagships. We have certain flagships, all of us here, but we have thousands and thousands of indexes on the back that are trading on, you know, the carve-outs, versions, different versions, custom indexes. We need to kind of remember all of this, right? The ecosystem is vast, and it means, you know, the IP is much more than just the flagships, right? In some cases, we need to think of all manners, and also from a risk perspective as well, right? Cybersecurity risk, all these things, right?
I think the other thing that is people conflate transparency on chain with trust on chain. And just because data is on chain, it doesn't necessarily mean it's correct, it's official, it's, you know, up to speed. And so I think there's actually two forms of education. One is educating our clients and working collaboratively with them to bring them along with us to understand the utility and the efficiencies that can be gained through the initiatives we're working on. And the other is educating our partners or collaborators on the DeFi side as to why you should be working with official licensed S&P data, why it's, you know, what you're going, you know, why you're going to get better, you know, trade execution, why it's going to be less risk. I think education is going to have, it's on both sides, essentially.
Yeah, and we see that at Kaiko as well, where not even just on the index or reference rate side, even just on the pure data side. And it's like, why do I need this data source over other data sources? Because there can be major impacts that you can't foresee by saving a few $100. You know, it's there is a lot of benefit that comes from working with a stable, reputable brand that's offering stable, reputable products. We have about 5 minutes left here. I have one final question, but before that, I'm curious about where you see the most opportunity regionally. A lot of us are based in the U.S. on stage, but Are you seeing any specific opportunities globally outside of the U.S.? And Vas is sitting over here, but curious perspective. Kristen?
Oh, sure. I think Asia's coming online, so we're seeing more of the exchanges say they're ready to start approving Bitcoin ETFs. The other thing that I think is really interesting that I'm seeing come out of Asia is a lot of the traditional derivative exchanges are talking to us and saying, we might not just do a futures, we're ready to do a perpetual straight away. I'm like, whoa, that's fast. Like if you're not even doing an ETF yet and then you're ready to jump into perps as a traditional exchange. So that's been a bit surprising. But, you know, if the regulators are letting them do it, then I think they're going to go for it.
Yeah, maybe not from a specifically index perspective, but just kind of from a DeFi perspective of what institutional finance is kind of looking for. We see a lot of requests coming out of Asia. Really, it's following regulation, depending upon where it's coming from. So in Asia, on the back of stablecoin frameworks that are coming out, clients are looking for more information, be able to track those pegs across the board.
We launched the S&P 500 on chain towards the end of last year, and yesterday with Centrifuge they announced that they had kind of rewrapped it and fractionalized it, and then we launched Perpetual fairly recently, and some of the feedback that we've already got is the access to the US markets that's now people have. Which they didn't previously have. And I think that's actually, again, really exciting. But, you know, it's interesting to see that actually somebody in Thailand who didn't necessarily have access to US markets before is now able to invest in the S&P 500 or in LATAM. And I think we're going to see a lot of demand in Europe and US and Asia, but also in a lot of these economies that we maybe overlooked previously.
Just a remark. Obviously, U.S. on this is, at the forefront, and also you all mentioned Asia, but it's surprising that on the Europe side, it's probably not surprisingly necessarily, but Europe is a bit lagging probably in terms of demand, or maybe they were a bit more conservative in Europe, as you say. So. It's not that necessarily won't come, but I think the demand currently is probably at the forefront in US and APAC. I would be very interested to see how it evolves in Europe, like what kind of lag we have basically, because I don't know as of now. It's a big question mark for me. Is it like, are we quarters away?
I think let's speculate wildly. 3 or 4 years from now. How does the coexistence stand? What does the market look like between TradFi and DeFi? Steph's got it.
I think we're going to see two rails. I don't think we're going to, tokenization is enabling broader distribution. It's not about intermediating the traditional market. And I think we are going to see much more demand in the DeFi space, but we will still continue to see the demand that is there. I don't think it's cannibalistic. I think we're just going to broaden the market. We're going to see more inflows from LATAM, from places that didn't necessarily have access to investable markets than before now.
Kristen, Matt?
I'll go. I think that we've seen that a lot of these tokens are really being used for collateral, so I think that's the name of the game for a while. What I think will be interesting to watch is as we have lots of tokenized versions of any kind of real world asset or any one of our individual IPs, flagship indices, is what happens when the liquidity gets fractionalized and you're trading different tokens that mean different things across the board. So I think that will be really interesting to watch. And then I could see a world that if I'm trying to calculate the Russell 1000, maybe my pricing source isn't always just the primary security listed exchange, and maybe we have to use multiple sources to really price it, or maybe I have a version that this is the tokenized version, this is the, the actual physical security version, that kind of thing, I think will be really interesting to see. And these are data points that people are going to need around ecosystems that all of our firms have been building for decades. So it'll be fun.
You said 3 or 4 years. Can I go a bit longer as well?
No.
So it's probably so all the existing instruments we're not going to go away, I think, right? So listed futures, listed options, ETFs, and swaps like the OTC, bilateral transactions, etc., are there to stay. I don't see this necessarily switching over to a different instrument, but I see more instruments on the tokenization side and in general, on-chain instruments basically coming in. So I think it's going to be almost like tailor-made on the client aspect, right? So institutional clients will be much more involved, I think, in a span of 4 years, and also they will be almost choosing based on the use case, right? So it will open up a whole new toolbox, which we don't really understand still, right? We're trying to think how it's going to be, but it's very difficult to understand, of course. And once we have the toolbox, it will almost be like a casual conversation on how are you going to do this, right? These are the instruments that you have, and you have all these extra toolbox. For us now, it's announceable things, these things, right? The tokenization of a fund, of an index, etc. It won't be announceable in 4 years from now. Everybody would have this. I think it's going to spread across the market. I wouldn't be surprised if you can find almost any stock, for example, on a token form, and then it remains to be seen what we do with it, right? Because the instrument itself is useful, but the use cases are for us to figure it out.
With negative time on the clock.
I'll keep it fast. Overall convergence, which will really just depend upon if there's customer demand, which it seems like there is, how the regulatory environment consistently changes. Some areas are moving a lot faster than others, and who knows what's going to happen there. And then how we're building this infrastructure as we're going forward. So all the demand is there, and we'll see where we are in a couple of years from then.
Tremendous opportunity, and I want to thank everybody on the panel for joining me, and everybody for listening in.
Thank you.
Thank you.